Methodical. Few things trigger immediate financial dread like opening your mailbox to find a stark white envelope from the Department of the Treasury. Inside is a CP14 notice, the official IRS demand for an unpaid tax balance. Your first instinct might be to panic, or worse, hide the letter in a drawer. But ignoring the IRS is a calculation that only increases the risk to your bank account. Inaction allows interest and penalties to compound daily. This video is your guide to responding correctly. We are going to decode the data on your notice, audit the government's math, and select the precise execution path. To follow along, you need your CP14 notice, your tax return for the matching year, and your personal records for any tax payments you've already submitted. Taking immediate procedural control of this document is the only way to prevent the IRS from moving toward a forced seizure of your funds. Step 1 is verifying that the notice is authentic and identifying your exact response deadlines before you take any action. Look at the top right corner of page 1. This section confirms the specific tax year the IRS is questioning and provides the official toll-free contact number assigned to your account. Move down to find the amount due and the specific due date. This establishes a rigid 21-day window. If the IRS does not have a payment or a plan by this date, the collection process automatically escalates. The billing summary breaks down the balance. It separates the base tax from the newly added failure to pay penalties and interest charges. IRS processing errors are common, ranging from duplicate income reporting to misapplied credits. You should not pay the balance until you have audited their accounting against your own financial records. Compare the CP14 summary against your bank statements. Look for uncredited estimated tax payments, or instances where a 1099 was filed twice for the same income. Confirming the accuracy of the math is the pivot point for your strategy. It determines whether you need to dispute the notice or begin negotiating a payment plan. If you cannot pay the full balance immediately, you have two primary options based on the results of your audit. If the notice is inaccurate, you must dispute it by calling the 1-800 number on the document. Have your canceled checks or payment confirmation numbers ready to provide as evidence of the error. Filing a dispute promptly is critical. It creates a formal record of your disagreement and can place a temporary hold on aggressive collection actions while your case is under review. If the IRS's math is correct, but you cannot afford the full balance, you must move to a formal payment arrangement. An installment agreement allows you to pay the debt in monthly chunks. You can apply for this directly through the IRS online payment plan portal, which provides immediate notification if your plan is approved. For those facing severe financial hardship, an offer in compromise may be an option. This is a specialized program where the IRS legally agrees to settle the debt for less than the full amount owed, based on your ability to pay. Review the penalty section of your notice to see the cost of delay. The failure to pay penalty adds 0.5% to your balance every month, and interest rates currently exceed 8% annually. Applying for a formal relief program prevents a default status. It establishes a legal framework for your debt, which stops the IRS from moving toward enforced collections like liens or garnishments. The final path is for those who agree with the balance and have the liquid funds available to clear the debt in full. Use the IRS Direct Pay website to submit payment directly from a checking account. This is the most secure method and avoids the additional fees charged by credit card processors. When paying online, ensure you apply the funds to the specific tax year and form number listed on your CP14. Misaligning these details can leave the debt active in the system even after you've paid. If the 21-day window closes without action, the IRS escalates. The CP14 is replaced by a CP504 final warning. Beyond that point, the IRS begins filing federal tax liens, which become a matter of public record. The final stage is a levy. This is where the IRS legally bypasses you to seize funds directly from your employer through wage garnishment or from your bank account by freezing your deposits. Proactive response is the only way to prevent this automated escalation from becoming a financial crisis. By executing one of these three paths, paying, planning, or disputing, you have effectively addressed the immediate requirement of the CP14. If your case involves complex errors or a balance you cannot navigate alone, consider contacting the Taxpayer Advocate Service or a tax professional to represent your interests. The 21-day deadline is a strict regulatory window. Submitting your response now ensures your account remains in good standing while the IRS processes it. Navigating these requirements through official resolution channels stops the automated collection cycle and ensures your